Hello students, this video is my third video for the chapter Final Accounts of Companies. Before you proceed to watch this video, kindly watch my previous video for this chapter, for which I'll give you the link in the description. In my previous video, I have given the format of the company's balance sheet and I have clearly told about what all headings will come under equity and liabilities and what all main headings will come under assets. In this particular video, I am going to tell you regarding the various items which will come under each one of these headings. Let me proceed further now. See, the balance sheet format I have already given you in the previous video. I'm just asking you to have a look at this now. This is what is the form of the balance sheet. As you all know, in the balance sheet, you will be having equity and liabilities first, and this will be followed by assets. And the balance sheet will be prepared in a statement form under equity and liabilities. As you can see in the screen, you'll be having three main headings, namely shareholders funds, non-current liabilities and current liabilities. This will be followed by assets, and under assets you will be having non-current assets and current assets. Now in today's video I'm going to tell you about the contents of the balance sheet in detail. So the balance sheet prescribed in the revised Schedule 6 consists of two parts. What are the two parts we have? The first part is equity and liabilities, and this will be followed by assets. Remember, the balance sheet is going to be prepared in a statement form, so assets will just follow the equity and liabilities. Now, under equity and liabilities, let us see what all will come. So under equity and liabilities, as I told you earlier, you'll be having three main headings, namely shareholders funds, then non-current liabilities, and then current liabilities. So first, what do we have? First, we have shareholders funds. Okay. So under shareholders funds, first we'll be having the share capital. So this you will be preparing as a note. Okay. So actually in the balance sheet, one column is for note number. So in the note itself, you will be doing all the calculations and the final amount only will be taken to the balance sheet. So this will be note 1 actually. Okay. We'll have this as note 1. So under this, if you're given different types of capital in the problem, you will have to mention those types. So as you know, you have authorized capital, issued capital, subscribed capital, called up capital, and paid up capital. Okay. So if you are given these different types of capital, that you will be mentioning. But in most of the problems, all these types may not be available. Sometimes you will be given the authorized capital, and as you will know, authorized capital is the maximum amount of capital which a company is authorized to raise as per the provisions of the capital clause of the Memorandum of Association. And this authorized capital will come only as a piece of information. It will not be taken into account for totaling purpose. Okay. So you'll just mention it. That's all. You will not take the amount for totaling. So usually you will be given the paid up capital in the problem, and when it is given, you will be mentioning it. So whatever type of capital is available, that will be entered in the problem. Okay. And in case if you have any calls in arrears, that will have to be deducted. And if you have any forfeited shares, that will have to be added. So after doing deducting calls in arrears and after adding forfeited shares, whatever you get, that will be the final amount which you will be showing in the balance sheet as share capital. But in most of the problems, you will not be given this calls and arrears, you will not be given forfeited shares and all that. Just like that, you will be given share capital, so many shares of so many rupees each. So straight away, you will enter it and you will take it to the balance sheet as note 1. Okay. Then next we have reserves and surplus. So usually this reserves and surplus will be recorded as note 2 in the balance sheet. So under reserves and surplus, these are some of the items which will come. So capital reserve will be there. Sometimes it will be given. Then you will be having general reserve in most of the problems. General reserve will come. Then capital redemption reserve, securities premium, debenture redemption reserve, revaluation reserve, workman compensation reserve, then investment fluctuation reserve. Actually, I've just given you all possible reserves which are likely to come. It's not that all this will come in all the problems, okay? The most common items which will come under reserves and surplus will be in many problems, general reserve will be there. In some problems, capital redemption reserve will be there. In maximum problems, most of the problems, securities premium will be there. Okay. And sometimes you'll be having the profit and loss amount given in the problem. That again will be shown under the heading reserves and surplus. If P&L is already given, that P&L amount you will take. With that, you will be adding the surplus, that is the surplus which is the balance in the statement of profit and loss. See, before preparing the balance sheet, you will be preparing the statement of profit and loss. So, in the statement of profit and loss, you will be getting an answer which is called as the profit, isn't it? That profit or surplus will also be shown under the heading reserves and surplus. So if you already have P&L account in the problem, that will be taken, and along with that, the surplus as per the statement of profit and loss will be added. Okay. So after doing all this, you'll be finding out the final amount, and this final amount will be taken to the balance sheet as note 2. Then the next item we have is money received against share warrants. This item is very, very rare. In most of the problems, you will not have this item. But anyway, to make you understand what it is, I have given it here. When you say money received against share warrants, first of all, you should know what are share warrants. Share warrants are the financial instruments which give the holder the right to acquire equity shares. So the holders of the share warrants, they have the right to acquire equity shares. In other words, these instruments, share warrants, will be converted into equity shares in a future date, at a future date or later date, at a predetermined price. So if you have any money received against share warrants, that again will be recorded. As I told you already, this item is a very, very rare item which will not be there in most of the problems. Okay, so these are the items which we'll be having. First, we start under shareholders' funds. First, we'll have share capital, then we'll have reserves and surplus, and then we'll have money received against share warrants. All this will come under the heading shareholders' funds. Okay, then the next item under equity and liabilities will be non-current liabilities. Under non-current liabilities, you'll be having long-term borrowings. So what do you mean by long-term borrowings? Long-term borrowings are those loans, those borrowings which are repayable after 12 months. That is, which are repayable after 1 year. So such borrowings which are repayable after 1 year, they are only called as long-term borrowings. And the most common long-term borrowing which you will find in most of the problems is debentures. So it will come here. Okay. And then you may be having deferred tax liabilities in some of the problems. So you should know what is meant by deferred tax liability. So every year the accounting income is calculated and it is compared with the taxable income. The accounting income is compared with the taxable income. If the accounting income is greater than the taxable income, it will be regarded as deferred tax liability and it will come under non current liability. On the other hand, if the taxable income is more than the accounting income, that results in deferred tax asset. This deferred tax asset will come under assets as a non current asset. Okay, so if there is deferred tax liability, that you will be showing here, and again, this item is very, very rare. You will not be having this item in most of the problems. Apart from this, if you have any long term provisions, that will be recorded here. Apart from long term provisions, if you have any other non current liability, if there is any other non-current liability, that will come as other liabilities. Okay, so I have given the maximum possible items which will come under non-current liabilities. As I told you already, in most of the problems, very commonly you will be having this item, that is debentures. Okay, so that you will be recording in the balance sheet. Whatever you get here, that amount will be taken to the balance sheet. Then the next heading we have is current liabilities. So, what do you mean by current liabilities? Current liabilities are those liabilities which are to be repaid within 1 year. Okay, liabilities to be repaid within 1 year are called current liabilities, right? So they are actually short term in nature. So under this heading, current liabilities, we'll be having items like short term borrowings. Okay, then we'll be having trade payables. Trade payables is nothing but creditors, and in case if there is any other current liability, that will come here. And if you have any short term provisions given in the problem, when I say short term provisions, it will include items like what you can say proposed equity dividend, something like proposed equity dividend, proposed equity dividend. This again is a short-term provision, and something like dividend tax payable, dividend tax payable, dividend tax payable. Such items will come under short-term provisions. Okay. Again, it's not that all these items will come in all the problems. A very common item which will come under current liabilities is creditors. That is, trade payables or creditors. Okay. So you can, if you have any calculations relating to this, you can do this and you can record it as a note number with a note number and take it to the main balance sheet. So with that, our liabilities get over. This so under liabilities, what are the three main headings we are having? The first one we have is shareholders funds. Under shareholders funds, we are having share capital, reserves and surplus, and money received again share bonus. Then the next heading we have is non-current liabilities. Under non-current liabilities, we have long-term borrowings, then deferred tax liability, then long-term provisions, and then other liabilities. Then under current liabilities, we have short-term borrowings, trade payables, other current liabilities, and then short-term provisions. Okay. Now, coming to the assets, we have two main headings. One is non-current asset, and the other one we have is current asset. These are the two headings we have. So, under non-current assets, the first one we have is fixed asset. So what all fixed assets you have, that will have to be recorded here. So first of all, you have to know what is meant by fixed asset. Actually, fixed assets are those assets which are held by the company not with the purpose of sale, but they are held by the company with a purpose to use it in the long run to earn profit. So those assets which are held by the company to use in the long run and to earn profits, such assets are only called as fixed assets. They'll be having a longer life actually. Okay. Again, under fixed assets, you have two categories. The first one we have is tangible assets, and the next one we have is intangible assets. So you should know what is meant by tangible asset and what is meant by intangible assets. Those assets which have a physical form, such assets are called as tangible assets. For example, assets like land and building, plant and machinery, furniture and fixtures, all these will be considered as tangible assets. Intangible assets are those assets which are not physical in nature. So the assets which are not physical, not physical, not physical in nature. They are called as intangible assets. So, usually, under intangible assets, you'll be having assets like patents, then you'll be having goodwill. This is a very common intangible asset which will come in many problems. Then, trademark, copyright, all these are some of the intangible assets. So if you have tangible assets, you'll be having a separate note and you will prepare it. And in case if you have intangible assets, that again will be shown under a separate note. So all this will come under fixed assets. Then apart from fixed assets, we'll be having items like non-current investments, then deferred tax asset. I told you when it is deferred tax liability, it will come under non-current liability, isn't it? When it is deferred tax asset, it will come under non-current asset. Then if there is any long-term loans or advance, it will come here. If there is any other non-current asset, that will be recorded here. So all this will come under the heading non-current assets. Okay, this will be followed by the next main item, that is current assets. So what are current assets? Current assets are those assets which are expected to be realized, within a very short period, that is within a period of 1 year. Those assets which can be realized or converted into cash within a short period of 1 year, such assets are called as current assets. So, under current assets, we have six heads. It's not that all the six will come in all the problems. Whatever is available, we'll be entering. So, under this, we have current investment, inventories. Inventories will usually be given in the problem as stock. This will be there in most of the problem. How will it be given? It will be given as stock. Okay. Then you will be having trade receivables. Okay. Then cash. This again will be there in most of the problem. Cash and cash equivalents. Short-term loans and advances. If it is long-term loans and advances, it will come under non-current asset. If it is short-term loans and advances, it will come here. And then other current assets. Apart from all these current assets, if there is any other current asset which can be realized and converted into cash within a period of 1 year, such assets will come under other current assets. Okay. So out of these six items, the most common items which will come in most of the problems are inventories. Then even trade receivables will be there in most of the problems, and then this cash will be there in most of the problems. Okay, so these are the various items which will come under current assets. So there are only two main headings under assets. One is non-current asset and the other one is current asset. Under non-current asset, we have fixed assets, non-current investment, deferred tax asset, long-term loans and advances, and then other non-current asset. So it's not that all this will come. Whatever is available in the problem, you will be entering. And under current asset, you'll be having current investment, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, and other current assets. Okay. So these are the various items which will come in the company's balance sheet. Okay. Now you have to find the total of equity and liabilities, and you have to find the total of assets. Okay, in other words, you have to find the total of shareholders funds, non-current liabilities and current liabilities. Okay, and the total of all these three, the total of shareholders funds, okay, non-current liabilities and current liabilities, this will give you the total of equity and liabilities. Okay, then you have to find the total of non-current assets and current assets, and this will give you the total of assets. So the total of equity and liabilities should be the same as the total of assets. Then only you will say that your balance sheet is correct. We'll say that the balance sheet tallies, isn't it? Only if the amount of equity and liabilities is the same as the total of assets, we will say that the balance sheet tallies, and then only your answer will be considered as correct. Okay. So, what is very important is memorizing the contents of the balance sheet. So, you have to be very thorough with the format. So, this is what is the simple format which we have for the company's balance sheet. Okay, I hope you are able to understand clearly. So, you can quickly look at the main balance sheet now, main balance sheet format. So this is the heading, balance sheet of such company as on such and such date. Under equity and liabilities, you're having all these items. Then you're finding out the total. Then under assets, you're having non-current assets, and then followed by current assets, and then you'll be finding out the total. So this is how you'll be preparing the balance sheet as per the format. Hope you are thorough with the format of the company balance sheet. What is very important in this particular chapter is that you have to be thorough with the format. You should be thorough with the format of the statement of profit and loss as well as the format of the balance sheet. So I want you all to memorize the format first. Once you are thorough with the format, you will be able to work out any problem easily. In my next video, I will be working out a problem involving the preparation of both the statement of profit and loss as well as the balance sheet. If you like this video, subscribe to my channel and also share it with your friends. Thank you very much for watching this video.